Welcome back. You're still tuned into markets at noon, and Nifty is now sitting with a cut of nearly 70 points as we speak, below the 25,050 mark. But what is the fundamental market setup looking like? To discuss exactly that, we are now joined by Dikshit Mittal, Senior Fund Manager, Equity at LIC Mutual Fund. Mr. Mittal, afternoon, and thank you so much for joining us here on ET Now today. What do you make of the market setup at the moment? All eyes are on IT earnings that will kickstart tomorrow. But your outlook on the market, and would sector-specific or stock-specific bottom-up approach work best in this kind of a market setup?
Yeah, good afternoon. Thanks for inviting me to your show. So basically, markets have been consolidating for close to 1.5 years. And the prime reason has been muted earnings growth that we have seen in the last 4 to 5 quarters. So I think market is now waiting for some sense of where the earnings are going. Till now, whatever expectations that we have, maybe reported numbers also. So earnings have been growing in mid-single digit to slightly higher on the index level. So that is keeping the markets in a range. But at the same time, lower levels, we are seeing support because of the cost of capital is quite low in India. Domestic liquidity is very, very good. So I think market is trying to remain in a range bound, and till second quarter earnings, this kind of phase can continue. And we are hopeful that from third quarter onwards, earning growth can accelerate. So maybe after a second quarter earnings or closer to third quarter, I think market can resume the upward journey. That's what we are thinking as of now.
Understood. So that's as far as earnings estimate is concerned. But if you track the consumption basket, Titan has seen a solid uptick of about 4.5% after it reported its Q2 update. If you can tell us, what do you make of the entire consumption basket and the kind of updates that we have seen so far?
Yeah, so consumption as a theme, we have turned positive in last 1 to 2 quarters because of variety of reasons. A key reason has been domestically, you can see rural and urban wage has actually now outpacing the inflation rate. So that means on a real term basis, we are seeing good wage growth. And coupled with the government actions of reducing the direct taxes as well as indirect taxes in the form of GST cuts, and RBI also pitching in by reducing interest rates, providing liquidity in the form of CRR cuts, and reducing risk weightage. All these things point that consumption should pick up going forward. And anyway, discretionary consumption, I think, will grow faster than the overall consumption rate. So we are positive on consumption overall, but more so on the discretionary items, or maybe you can say high value or premium consumption items. I think those categories have long runway for growth, and we can see some acceleration in growth maybe from third quarter onwards.
Okay, so that's the take on the entire consumption scheme. Dikshit, hi, morning. Also give us a sense of what you're making of the entire manufacturing and capex related sectors. We've been hearing about private and public capex and the need for that to pick up. But overall, what is your sense when it comes to the entire manufacturing, EMS, semiconductor space? Where do you see, if at all, any compounding opportunities within this basket?
Yeah, so there are selective pockets which are seeing very, very good opportunities for growth. So you rightly mentioned semiconductor, EMS, manufacturing. So wherever we have scope to maybe reduce the import dependence. So I think those sectors, I think, have better revenue growth visibility as well as profitability visibility. So capex will happen in these sectors. But on the flip side, most of these sectors are very, very capital light. So they don't need large amount of capex, unlike large power plants, large steel plants. So most of these new age sectors, they are quite asset light. They have high asset turns. So to that extent, that may not reflect in the overall capex growth. But I think wherever we are seeing import replacement opportunities, manufacturing opportunities, as well as export also. Like export also, maybe last 1 to 2 quarters have been quite bad because of these tariff issues. But I think structurally exports should also pick up. So combination of export market share gain as well as import replacement, I think whatever companies who are into this space in the manufacturing, I think they will do well.
Okay, so several sectors likely to do well. That's as far as consumption and several other sectors is concerned. But also wanted your thoughts on the entire oil and gas space, especially with the kind of move that we have seen in IGL yesterday on account of tax rejig in Gujarat. What do you make of the entire basket? In fact, Citi has come out with a report and they believe that the risk reward is very favorable because of the kind of underperformance that we have seen YTD. Would you concur with Citi's view?
Yeah, so oil sector as a whole in India is trading at a valuation discount to the general market, and rightly so because of many regulatory constraints faced by these companies. So most of these companies, whether it's oil marketing companies, city gas companies, or maybe even the refinery companies, so they are facing quite a lot of regulatory intervention. So to that extent, earning visibility is beyond a point is not there in this sector. So that is reflecting in the valuations. But no doubt, these sectors, these stocks remain a trading play. We are expecting that second quarter as a whole will be good for this sector. So there may be some trading interest in these stocks. But as a house, like taking a 2 to 3 year view on these highly regulated sector is a challenge for us. So that's why we are not taking a very long-term view on this sector as of now.
Okay, so that's the take on this entire oil and gas space. Dikshit, thanks so much for your time today and great chatting with you today.
Thank you.
Thank you. Okay, on that note, viewers, let's slip into a very short break and we'll keep the conversation going about the markets on the other side when we're done.